Hello, dear traders, welcome back. Being a trader, I believe it is the responsibility of every trader to learn every possible method out there. This way, what will happen? They will find the method which best suits with their personality and style. Secondly, their confidence will massively increase in their capabilities in terms of trading. And lastly, they will be having a better confluence of signal to enter in the market, which as a result will increase their winning accuracy or their winning ratio. But the fallacy is that most of the traders think that being reckless and ignoring to gain the insight, they can become successful in trading. So that is never going to happen, especially in this field of trading. And honestly, being a content creator, I want all of you to become successful in trading. And having that in mind, I thought to share the types of channel and how to trade them in the markets. So before we start, kindly give me thumbs up and subscribe to my channel. Let's get started. You can see I have marked a descending channel and ascending channel on the chart. Before explaining the scenarios to you on the real chart, I will take you to the illustration part to make you better understand the topic. So, the first channel we are having is ascending channel. First of all, we will make sure while forming this channel, we will make sure that the trend lines we draw are 100% parallel to each other. Okay, what happens at ascending channel? The market makes higher low, higher high, higher low, higher high. This way the market forms ascending channel. Guys, keep it in mind that the ascending channel is destined to break to the downside. So what confirmation we are required to have in order to know that the channel is about to break to the downside? First of all, at this part, the market touching the upper trend line of the ascending channel. So while touching the upper trend line, we will see that has the market formed any bearish candlestick at that point. And what candlestick that can be? That can be a pin bar, that can be a bearish engulfing pattern. So if the market has formed, let's say, a pin bar at this point or a bearish engulfing pattern at the upper trend line of ascending channel, that is the first signal we are having that the market is about to break the channel to the downside. Secondly, at this feed, at this side, or at this phase, we will note that the market that has the market formed powerful bearish candlesticks. Okay, and we can also take some help from the volume. So this was about the ascending channel. I will show you the examples and the method how to trade them on the real chart. Okay. So first, if you can see, I have drawn these fake outs in the channel, which has breached the channel to the upside and which has breached the channel to the downside. So these fake outs in the channel are normal, and we can see countless examples of this channel with having the small fake outs. Guys, now let me take you to the real chart to show you its example and how to trade them. So first of all, as I mentioned, that the trend line must be 100% parallel to each other. Secondly, guys, let me pinpoint the areas where the market made the small fake outs. See, these small fake outs are normal. Secondly, as I mentioned, that at this point, if we see the market has formed powerful bearish candlesticks, which is indicating that the ascending channel is about to break to the downside. And yeah, it happened. The market broke the channel to the downside, and now we can witness the gargantuan bearish move. Guys, now let me show you another example. Uh, we can see the market is forming higher highs and higher lows and higher highs, repeating repeating the patterns till this very point. So now the market has formed the ascending channel, which we know will break down, uh, which we know the market will break to the downside. So the first signal which indicating that the market is about to break to the downside is this powerful bearish candlestick, which is a bearish engulfing candlestick. And secondly, we are having this another powerful bearish candlestick, which is indicating that the channel is about to break to the downside. We are also having small fake outs at this point and at the upper trend line of the ascending channel. So we saw what happened when the market broke the channel to the downside. We can also see this huge move to the downside after breaking the ascending channel. So guys, this is how the market works. How we will enter in the market. Firstly, we will enter directly in the market when the market breaks the channel to the downside, but we will make sure that the market has formed a huge bearish candlestick before breaking the channel. Only then we will enter when the market breaks the channel to the downside. Secondly, we can enter on the pullback move. The pullback move can last up to the area of previous support, which is now meant to become resistance, or either the market will touch the lower trend line of the ascending channel, like this one. We can also enter at that point where we will place our stop loss. So definitely we will place our stop loss, let's say above the previous high. Okay, that will be the area where we will place our stop loss, and which area we will target for profit. So we will target the area for profit from where the channel started to form. This area, this is the area which will target for profit, and that is only when the market is not trending to the downside. Like here the market was in the uptrend previously, and then the market formed this channel. So let's say if we say when the market formed the ascending channel in the downtrend, then what we will do, like in this case, we can target 2x area 2x area of the channel formation. Like let's say the channel is formed in 45 pips, so we will target 90 pips for our profit. Okay, we will count, we can calculate by trend line. There are several ways, so that is the ways we will trade the ascending channel, and we will place our stop loss above the previous high. This way our stop loss will be less likely to trigger in the market. Now let's come toward the second channel, which is the descending channel. What happened at the descending channel is that the market forms lower low, lower high. The market forms lower low and lower high. So the descending channel is destined to break to the upside. Okay. What we will do, we will make sure that the trend lines are 100% parallel to each other. A little bit fake outs to the downside and upside of the channel is normal. And that should not be a headache for us. So how we know that the channel is about to break to the downside, to the upside? It is at this point touching the lower trend line of the descending channel and the market forms a powerful bullish candlestick. At this point, the market forms a powerful bullish candlestick. What is the powerful bullish candlestick? Either that is a pin bar or it is a bullish engulfing candlestick. Secondly, in this phase of the move, the market is forming powerful bullish candlestick. Okay, from powerful bullish candlestick, I mean the market is forming full bullish candlestick. So that is the second signal we are having that the market is about to break the channel to the upside. Now let me take you to the charts to show you real examples and to show you how to trade the descending channel, where to place your stop losses and where to place your target profit. So guys, this is the real chart example of descending channel. So what happened? The market is forming a lower low, lower high, lower low, lower high to this point. Okay, we made sure that we form the trend lines 100% parallel to each other. We draw the trend lines 100% parallel to each other regardless of the small fake outs that will appear on the channel to both sides. Like this is on the lower trend line and this is on the upper trend line of the descending channel. Secondly, we saw the market touch the trend line, the lower trend line of the descending channel and form this candlestick, which is a bullish candlestick, bullish engulfing candlestick. Prior to that, the market has formed a doji, the red candlestick, that is a doji, and in this phase of the move, the market has formed powerful powerful bullish candlesticks. So what we will do, first of all, we will immediately trade the market once the breakout happens to the upside. The first step, trading of this channel. Secondly, we will place our stop loss below the recent low. This is the most recent low the market has formed during this channel, during the formation of this channel. Okay, and which area initially we will target? Initially we will target the area from where the market has formed this channel, and this was the area. It was clearly let's say 1:2 trade, a risk to reward, 1:2 risk to reward trade. So as it was not in an uptrend, so we only targeted the profit area from where the market has formed the channel. What we will do when the market forms the descending channel in an uptrend? Let me show you the example. So guys, this is the example of the formation of descending channel in an uptrend. How we know the market is in an uptrend is because the market is forming higher highs and higher lows, higher highs and higher lows. That is where we know the market is in an uptrend. So we saw the market form this descending channel. No matter what, guys, again we will draw the trend lines 100% parallel to each other. Okay. Secondly, at this point the market formed a small pin bar, which indicates that the market is about to break the descending channel to the upside. And in this phase of the move, the market is forming these huge bullish candlesticks. So in this case, we will place our stop loss below the low, like the recent low. And in an uptrend, we will target when the descending channel forms in an uptrend, we will target 2x area. We will target for profit or profit target will be 2x of the formation of the descending channel. Like it was 12 pip, so we will make sure that we target 24-25 pip move uh, to this point. This is how we're gonna trade the descending channel in both uptrend and in a downtrend. Dear traders, now let me take you to the last type of channel, which is sideways channel. In the sideways channel, again, we will make sure that we draw the trend lines 100% parallel to each other. I am repeating this phrase of 100% parallel trend lines because I want you to remember this thing while drawing the channels in the market. So, in the sideways channel, we only need like at least we need two touches on the upside on the upper trend line of the sideways channel and two touches on the downward channel of the sideways channel, sorry, of the downward trend line on the sideways channel. So exceptional cases is when these fake outs happen in this trend line too, sorry, in this channel too, and it is normal. So at least we need two touches to the upside and two touches to the downside. The more we are having touches to the both sides, the more the move will be huge when the market breaks the channel to either sides. So guys, how we know the market is breaking this channel to the upside or to the downside? So the first thing uh, we need to know is that like if our bias to look for the market to break the channel to the downside, so we will make sure that the market forms a powerful candlestick at this part. Okay, again at this touch on the upper trend line, the market needs to form either a pin bar or the market needs to form either a bearish engulfing candlestick. And in this phase of the move to the downside, the market needs to form powerful bearish candlesticks. Then it is possible for the market to break the sideways channel to the downside. Okay, so this is the scenario for the market breaking the channel to the downside. Now, what if the market break the channels to the upside? Like if our bias is going long on the market, we will make sure the market forms a powerful bullish candlestick. Okay, I said powerful bearish candlestick at this point. I'm saying powerful bullish candlestick at this point. So either the market needs to make a pin bar or a powerful bullish engulfing candlestick. So when the market starts to move to the upside, in this phase, the market need to form powerful bullish candlesticks. Okay, and when the market, that is the indication that the market is about to break to the upside. So how we will trade the sideways channel if it breaks to the either sides? Let me show it to you on the real chart. This is the real chart example of the sideways channel. So as I mentioned, the market need at least two touches on both sides of the channel. We are having one, two, three, and four touches. Okay, we will ignore the small fake outs as these are normals which happens in all the channels, ascending, descending and sideways channels. Again, we are having the these fake outs which we will consider as the first touch on the downtrend, sorry, the downtrend line of the sideways channel, second, third, fourth and fifth. So now you see where the gap has formed. The gap has formed near the area to the downtrend line of the sideways channel. Okay, and in this phase of the move, the market has formed powerful bullish candlesticks. That is a sign that the market is about to break to the upside. Now what we will do? How we enter in the market? Uh, we will wait for the market. We will wait for the pullback move to touch the upper trend line in case if the market breaks to the upside, and we will wait for the pullback move to the downward trend line in case if the market breaks to the downside. And once it retests the trend line and forms a bullish candlestick in bullish scenario and bearish candlestick in bearish trend scenario, only then we will enter the market. Okay, so here we saw the market formed uh, this candlestick with huge wick. Okay, the wick is literally huge, and the body closed above the breakout of the trend line. Look at this wicky candlestick body that closed above the breakout of this trend line. So at this point we will enter in the market and we will place our stop loss below the wick, below the candlestick. How much area we can target? At least we can target this much area, as much it took for the channel to form. Like let's say this is 40 pips area, we can easily target 40 pips. Or even what we can do, we can target the recent high in the market in bullish scenario. In bearish scenario, we will wait for the market to make a pullback move to form a bearish candlestick, and then the first target will be the area it took for the channel to form. We will target the same area, okay, as much area as it took for the channel to form. And in the bearish scenario, the second target will be the previous low. Guys, this is how we're gonna trade the all types of channel. I do hope that this video will help you in your trading journey. It will uplift you as a trader and will guide you in trading. If you enjoyed the video, like the video, give me thumbs up, comment on the video in another session. Take care.